Are still up 11.4% year over year. Meanwhile, the median sale price jumped 8.3%.
Let's get to today's action for what's ahead next week. Larry Shover is in the heart of the action at the CME. Drew Canale will tell us why ultra diversification is the best way to beat the market. And Peter Burns has the scoop on what the White House may be considering to curb high gas prices. Let's start at the CME Group with Larry Shover. What's the number one thing you're looking ahead to for next week?
You know, there's really not a whole lot of catalysts. I'm looking at Bernanke and the Fed. There's going to be a lot of talking by the Fed. It'd be more important to see what Bernanke doesn't say as opposed to what he does say. He's going to be very protective. He's going to definitely talk about the headwind of inflation with gasoline. But on the other hand, he's going to say we have a lot of room to move right now because on general, inflation is at bay.
Well, yesterday I spoke with Richard Fisher. Of course, he's not a voting member anymore of the Fed, but he does have a strong voice in the Fed, and there are people that follow what he says. He says no way there should be any more money printing. There's been too much of this quantitative easing. We have plenty of cash in the banks. Corporations have plenty of cash. Will he be listened to?
He'll be listened to, but I'm actually a lot more interested in hearing from Yellen. We haven't heard much from her in a long time. She's been dovish, and I do believe she's going to carry a lot more weight. So we'll see what happens, but I do think there will be some quantitative easing down the road because our numbers are far too crunchy right now. Consumption, wages, things really aren't all that great.
Are you watching the price of oil right now, or are traders pretty comfortable with this level?
You know, it's the new normal. I mean, the dollar's lower right now. The escape velocity crowd is winning. That makes all commodities rise right now. Just about every commodity's gone up. Base, industrial, gasoline, oil, everything. So this is the new normal. To everybody else, it seems like, hey, the economy's in good shape, so therefore oil should be $107 a barrel, for better or for worse.
All right, we just had a chart of gold. It took a $20 jump today. It's now at about 1663. Did it find its bottom?
Well, you know, it's been in a really volatile range, as you know. They're saying support is 1630. That's when we're going to see India and China and even Saudi Arabia come in and start buying it. 1680 seems to be the resistance level. So until something credible comes out in the news, we're going to see volatility between those 2 points.
Larry, what was the most surprising or distressing trade or piece of data that you saw this week? What sort of set you off?
What set me off was actually the PMIs that came out of China. They're actually not going the right way. Most people look at PMI and say 50 is like the good part. Anything above 50 is good, below 50 is contracting. I like to see the PMIs going in the right direction. And right now, China might not be engineering the soft landing that we're all hoping for. So that's something that really troubled me. But on the other hand, copper, which they import 40% of it, didn't even blink. I mean, it's up on its highs for the week. So it's been a very confusing week.
Well, if China does have a harder landing, I mean, where's the demand for the oil? Aren't we going to see oil really crash in price?
Well, I don't think so, because there's the emerging markets, you know, other than that, there's Brazil, there's Russia, there's South Korea, et cetera.
Yeah, but so much
Africa.
supply, Larry. I mean, just tons and tons of supply coming online.
Yeah, but the fact is, China is spending so much more money on internal infrastructure right now. Surely, if China has a hard landing, oil production will or oil importation will drop off. But there's a whole other part of the world, like India, for instance, who is importing tons of oil and now is going into jet fuel and diesel, putting a lot more pressure. And the refinery problems that we've had around the world, I think it's going to stay up at least $100 a barrel.
All right, Larry Shover, Chief Investment Officer at SFG Alternatives. Thanks so much. Have a great weekend.
Thanks, Larry. Now we have a money manager who says despite the run-up that